You are listening to ChartingWealth.com for Wednesday, the 3rd of May, 2017. We see that both of our stock indexes are up. The 20-year bonds are up. Gold is down. We will start with the S&P 500 on our weekly chart. We see that we have 2 weeks of up movement. Of course, we have the S&P still in a confirmed down move on our weekly chart, but it is quickly trying to move, it appears, toward an uptrend. It has not happened yet. Our 2-day chart, of course, rotated over going up. It rotated over with a confirmed crossover on the 27th of April. And we've seen the market basically continue to sort of top out since then. It's stayed at about the same level for the last 3 2-day candlesticks. Now we're just on the first day of the latest, so that really represents 5 days so far. We'll see just how much further the S&P will go up. Again, when we look at that weekly chart, it is trying its best to pull that chart over and up, but it has not happened yet, so we'll continue to keep an eye on it. We, of course, are warning about anyone staying in a down move at this point until we see that 2-day chart rotate back over going down. So let's keep pushing through these charts. The Q's up considerably more than the S&P. It was only up 0.04%, the S&P 500. The Q's is up 0.17%. Of course, we had that weekly vertical crossover occur at the end of this past week on Friday the 28th of April, the last trading day of April. And of course, we also saw on that 2-day chart, we had a confirmed crossover on the 27th, the day before, with the weekly crossover, and we've continued to see those markets move up. We had a jumping in point on Monday at 10:30, and the market has continued to move up as our weekly vertical crossover predicted. Of course, we had that fake out that occurred on the 13th. That was Thursday, not Friday the 13th, where the weekly vertical crossover did cross, but it did not hold for very long at all and sprang back in the other direction, moving up strongly. So, of course, we jumped out of that old trade and jumped into the new one and have seen nice appreciation and growth in the price. So we are currently in that Q's move right now. Let's keep moving through the charts. Next, we will go to TLT. It was up for the day 0.51% on our weekly chart. We've still broken through that weekly trend line. We do see, however, that the weekly trend is continuing to move up. We have the derivative oscillator has moved down some, but that PPO, price percent oscillator, is continuing to move up. We'll continue to keep an eye on things. We do have the weekly is in a confirmed up move, and let's zoom in and take a look at what's going on the 2-day. Of course, that is not. It did cross over on the 1st, going down. And the beautiful thing about our free StockCharts.com software is it is so easy to make changes. You can do those on the fly. I do them all the time just to show you how easy those are on the charts. Of course, with that confirmed down move in the 2-day chart, we would not be very wise to be in an up play, particularly seeing as how we talked about yesterday. We had violated on that 2-day chart our weekly trend line also. So we have a confirmed down move on the 2-day chart, which of course tells us that we need to very much think twice about staying in that up move until we see a rotation back over going up, if the chart is actually strong enough to do that, if price movement dictates that, and the weekly vertical crossover going up still holds, then of course that would put us back in, but we would not be jumping in at this point because of that crossover on the 2-day chart going down. Now, but it has done well for us in that up move. We saw great accumulation of price movement when we had that 2-day crossover occur back on the 22nd of March. We saw Lots of good price movement until it topped out there on the 19th, that 2-day candle ending on the 19th of April. So let's keep moving through the charts. We'll follow our last chart. Gold barely down for the day, 0.02%. Now on our weekly chart, we can see that this is our second week of down movement. We can also see that the price percent oscillator has started moving down. Derivative oscillator continues to move energy. It continues to lose energy, but we're still in a confirmed up move on the weekly. Crossover hasn't occurred yet. Let's take a look at our 2-day chart. And of course, our 2-day chart has rotated over, going down. And again, what does that tell us? Well, it makes us think twice about staying in the up move, particularly when we've penetrated our weekly trend line and we have a crossover going down on the 2-day chart. So what do? Well, we shall wait and see until and if we have a crossover going back up on that 2-day chart. But remember how we talked about yesterday. What are we really looking at? We continue to look at this 4-hour chart, because that 4-hour chart crossed over going down all the way back on the afternoon, late in the day, on Wednesday, the 19th of April. And remember how prescient our 4-hour chart is? We just continue to watch how beautiful and simple that one little 4-hour chart is for gold. When it works, remember, it stops working, it appears in December, and then starts working sometime again in January. So we'll continue to keep our eye on this 4-hour chart. It seems to be the best and easiest chart that we have of all the charts that we follow in that 4-hour time frame in and of itself. So we'll continue to keep you posted. Of course, we'll feel best about it if indeed that weekly crossover continues to hold, when and if that 4-hour chart rotates back over, if there's not enough power to pull that weekly down too, as it has with the 2-day. That's where we are as we end the day on Tuesday the 2nd of May and go into Wednesday the 3rd. Of course, we love to hear from you, spending a lot of time today answering your emails. We appreciate your thoughts, concerns, and inquiries. We try to answer all of those. cw@chartingwealth.com. Please make sure that you sign up for our newsletter. We send out this video that we do every day, along with lots of helpful information, including the layout that we use at freestockcharts.com. The operative word there is free, along with our How to Read a Stock Chart video and the daily and weekly market worksheets. We also have a trader's sheet that we're about to put out, so you can keep up with and note all the lessons and things you learn from the practice trades that you do. One thing we're going to start focusing on more and more and more is really encouraging you not only to fill out the daily market worksheet, but to do practice trades. If you don't do real practice trades, and by real, I mean not simply noting down some prices and things, but actually going into a virtual simulation, and you can do that on any of the big online brokerage firms. You can set up your own little virtual account, become a virtual millionaire, and then we want you to practice trading. That is, literally go in and buy virtual ETFs, buy them, watch them go up, and sell them, and see how you can actually accumulate money. When you start keeping up with it, you're going to learn a whole lot more than simply thinking about it, not doing it, and only remembering the good ones, not the good, the bad, and the ugly. And in fact, you will learn that you learn the most from your mistakes, but you don't want to keep repeating those. My friends, thank you so much for being with us again. Let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Please go to YouTube and subscribe to us. And also on iTunes. You guys have made us, I was checking today, number 4 in the world when it comes to stock trading podcast. I think we're number 6 stock market podcast, and we so appreciate all of that. So let us hear from you. Let us hear your questions, concerns. We'll try to always generate the kind of training that you need and help you in any and all the ways that we can. God bless. All the best from chartingwealth.com.